So now, yesterday we discussed about these four types of subsidiary books. Today we are going into the next one, that is cash book, which is very important. Okay, so let's start with cash book today. So I think you have done your homework of the purchase book and sales day book, correct? If I'm not wrong, please tell me yes or no.
Yes, sir.
Yeah, I think you have done your homework. If I'm not wrong, again I'm repeating. If not, then please do it today. If you have any doubts, you bring to my notice. I'll be correcting them. Okay. So now I'll write a statement for cash flow, cash book. Cash book works on the concept of debit all receipts, credit all payments. So very simple. See, if I ask you a journal, okay, that means suppose there is an income. You have received some income. Let's say rent received $2,000. What is the journal entry for this rent received $2,000? Very simple. The journal entry for rent received is nothing but when I receive rent, I receive what in my hands? Cash. So cash account debit. Why cash account debit? Because increase in asset. I am getting money. Suppose I have $0 in my account. Now I receive rent of $2,000. So my cash account has increased by $2,000. Increase in asset is debit. Rent received is an income. So increase in income is credit to rent received. Credit. Okay. Very simple. And then if it is like salary paid, so decrease in asset because cash is decreasing, that is credit. And expenses, so 10,000 salary I'm paying. I didn't pay any salaries, but now I'm paying $10,000. So my expenditure has increased by $10,000. So increase in expenses debit. Okay. So salary account debit. So it's an increase in expense 10,000. I put it here. So debit. And my cash is going out. So cash account, I can write credit $10,000. Okay. So this is what. So you understood very clearly what this is. Now, if I make a cash book, let's say cash book, particulars amount. Okay. So when I received rent, it is increase in asset, increase in cash. So where should I write that? In debit. Am I right? So I write in debit, correct? To rent received. Please tell me yes or no, please. Come on. Hello.
Yes, sir.
I will write in debit, na? Double entry system. I gave you the videos. It was very clear. So this is in cash. I won't write cash. In cash, I would write rent. So I would write in debit. Why? Because debit shows increase in cash. My cash has increased because I received rent. Secondly, in the case of salary, my cash is decreasing. So I will write in credit. So I write salary. It is a decrease in cash. So 10,000. So my cash has decreased because I paid salary of 10,000. My cash has increased because I received rent of 2,000. Very simple. So this debit shows receipts always. It always shows receipts, and credit, this is debit side. Credit side, and credit side always shows payments. That's it. Now, so same concept you have to apply here while doing a cash flow. While doing a cash book. Okay. So what I have explained to you, the same thing you can find here. So cash book shows all the receipts in the debit. So narrative is nothing but details. F blocks, J Spalding. We received some cash from them. So what we received from them is $4,000 and $200. So $4,000. F blocks has started business with $4,000. So what has business got? $4,000. What has come into the business, or what has business received? $4,000. So that was in the form of capital. Okay. And then receivables like J Spalding. J Spalding happens to be one of the receivables of the company, and J Spalding has made a payment. See, receivable is nothing but from whom we are supposed to receive money. So when they make payments to us, we receive cash in our hands. So we wrote J Spalding's amount here in total, but you know we have to give more details. So in receivables, we wrote $200 because we received $200 from J Spalding, okay, which was due from him. And then J Smith is also like someone whom we like sold the goods. Whenever you sell the goods, what is that you get? You get cash to sales. Why we write this? Because when we sell goods to someone, our cash, which is an asset, it increases. So when asset increases, it is debit. And when I sell goods to someone, that is an income for me. Increase in income is credit. Okay. So I received money because I sold goods. So I just posted that in the sales account. That means in the cash book, I'm showing this cash is received because of sales. Okay. Which I've done. And then the total happens to be 4,700 vertically. You can see 4,000 and then 200 and then like 500. Is it so? Is that? Yeah. So 4,000, 200 and 500. So total happens to be 4,700 for capital. In form of capital, my business received 4,000. In form of sales, since I made sales to people, they paid, I got 500 from them. Then one of the receivables, who is J Spalding, has made us payment. I got 200 from them. Okay. So this is what is the division. Now, next comes the payment. So we will discuss about the payments even, and then I will give you a cash book here. I will wait for some time, which you have to do. So we will also discuss about that, and we will wind up this cash book. And after that, there's a petty cash book thing which we have to do down. And then almost all subsidiary books are done and only some theory part. So there is some example here. So we are showing Manley and Company some payment of $350 for telephone bill. Company has paid $50. Digby Company, maybe some supplier or someone, or payables or whatever, or maybe cash purchases. That means we purchase goods and we immediately made the payment. So that is like $1,000. Okay. So what does it show? Manley and Company happens to be our supplier to whom we have made payment now. Okay. So the money has gone to whom? To the payables. So in payables account, we are showing the payment of 350. Then telephone bill, we paid 50. Digby Company, from them we purchased goods. So we immediately made the payment to them, $1,000. Okay. So that shows the total of 1,400 vertically and horizontally. These are the details. Okay. So I really hope you understood this. So I'll move forward. Please tell me.
Yes, sir.
Yes. So these are the payments. These are the receipts. Done. I'll move forward. So like this particular question we have to do. So we will do it fast. At the beginning of 1st September, Robin Plenty had 900 in the bank. So he already had 900 in the bank. So it is like already he holds 900. So we'll start with 900, correct? So in the receipts, we will show $900. Please tell me yes. Yes. Why we are writing $900 in receipt? See, cash is an asset. So when you have money in that account, it is always you treat it as debit. Why? Because if I have $0, then also then the meaning is I don't have any money. But if I have $900, definitely from zero it has gone to 900. So there was an increase in cash. That's the reason why my cash account is showing some balance of $900. So increase in cash is always debit. So I always put that in debit. Okay. Okay. And then I show debit is nothing but the receipt side is all, the debit is nothing but all receipts. Okay, and credit is all payments. Fine, I already have given the statement to you. So since from $0, $900 is the increment, it is always increase in cash. Increase in cash is debit. Debit is receipt here. So I write it here. Okay. Now I started with $900, and then again what has happened? Let us see. Cash sale receipt $80. So I will immediately put that $80 in the receipt. And I have put it cash sales. So for what reason I got, I put it here. Okay. Next. Payment from credit customer, hey, $380. Payment from credit customer Bean, $720. Payment from credit customer Seed, $140. So I put all this. These guys happen to be my receivables. So I received payments from them. So I put it there. Hey, Bean, Seed. Then so this is done. So I'll just put a tick mark where I have finished. Check received from Lendinger 1800 to provide a short-term loan. So check received from Lendinger 1800 to provide a short-term loan. That means maybe we have given loan to someone and we received check received from Lendinger 1800 to provide a short-term loan. That means, so like we are in the sense, we have given some loan to Lendinger. Okay. For check received from Lendinger. Okay. So we have taken a loan from Lendinger. Okay. So that loan, like Lendinger is giving to us. See, suppose I have approached to Lendinger for loan. What Lendinger can do? Either he can give me cash in my hands, either he can give me a check in my hands, which I have to deposit and in cash. Am I right? Yes or no?
Yes, sir.
So now Lendinger has given what to me? $1,800 as a short-term loan in form of check, which I can encash. So I'm receiving money or I'm paying money? Definitely I'm receiving money. And the entry would be cash to loan. Why? When I get loan from someone, that increases my asset. So that is nothing but that is debit. Because increase in asset is debit. Which asset is increasing? Cash. And then if I take loan from someone, it also increases my liability. Increase in liability is always credit. So I put that loan in the credit, loan account in the credit. Okay. So my cash increases by 1800 and my liability also increases by 1800. Increase in asset is debit, increase in liability is credit. So I put it here, very simple. So I got money from Lendinger. So I mentioned Lendinger's name. Okay. For loan, I got this. And then, excuse me. Yeah. And then second, cash sale receipt 150. So again, I'm receiving 150 for cash sales. I put it here. Okay. And then one more thing, if anything is there, we'll put it. Cash received from sale of machine $200. So we'll put that also because we are receiving cash. It's a receipt. So machine, sale of non-current asset of machine $200. So I get this much amount, and if I total them, it happens to be 4,370. Now please have a look at all these amounts. Then we'll go for the payment side.
Done, sir.
Yeah. Now payments. rest all we can put it here. All these things, payment to supplier Q, we'll put in payment side. We'll put this payment in payment side. Supplier here, and then we pay telephone bill, pay payment of gas bill. So we'll put all those things here. What is that? So accounts payable. So this is payments. Q here, telephone bill. Okay, and then there would be some else even. See, in India, what we do is we make a cash book in such a way that we put all the receipts entry in debit side and all the payments entry in credit side, and we write particulars amount, and we write all the receipts here, and we write all the payments here, and then we tally them. But here they are showing it in different they are showing us different accounts, receipts. They are showing it as receipts and payments separately. So we'll see what is the motive, and we can understand in this way also. So yeah. So one more instruction: whenever you start to make cash book, you always have to see whether like you are starting that cash book with some amount already in it. So if it is the case, then brought down you should write in the beginning. So we have written that brought down in the beginning, balance brought down. That's one more instruction, which I've already explained in my way. And then something else we will tick it here and put payment of 1500 to Hess for new plant and machinery. So that also will post it here. So we made payment to Hess, maybe our payables. What is that? 1500 for what reason? Okay, we bought a plant and machinery, so we made the payment. So that 1500 we are mentioning here. One more thing we have. 100 is cash in cash withdrawn from bank for petty cash. That means the money is going out. So when you withdraw money, the money is going out from your account. So that also is nothing but for a payment. So that also we mention here, petty cash payment. Okay. So now you see some balancing figure here. What is the meaning of this balancing figure? Let's understand. So what you need to do is you need to do the total of this. Just do the total of these 5 figures and tell me how much it is. So it is 2710. Okay, this is the total of payment side. So we put it payments total as 2710. Okay. What is the total for receipts? 4370. That is already you have totaled it. So receipts 4370. See, as per the rules of accounts, your receipt total should always be equal to payments total. But do you think that these totals are equal? Come on, tell me. Hello?
No, sir.
These totals are not equal. Of course, the receipt side total is more than the payment side. So what you have to do is you have to take a higher total on both sides. 4370 here and 4370. Why? Because the receipt total should always be equal to payment total. If I take 2710 here, 2710 here, doesn't like I cannot take like that. Why? Because I need to show these two accounts are equal. Okay, for tallying them. So now, since I'm showing these two accounts equal, but you practically see these two are not equal, correct? So how will you equate them? How will you like equal them? What you can do is you can see what is the difference amount between 4370 and 2710. What's the difference amount? It is 1660. So what I will do is I will write that difference here 1660, which shows that my payment side was 2710, my receipt side was 4370. Always the receipt total should be equal to payments total. Smaller total I cannot take here both sides. Bigger total I can take. Why? Because I know a difference is created and that difference is 1660 here. So what I'm doing is I'm carrying 1660 from here. That is the reason I'm tallying both of them. That means showing them equal. So I will write it as by balance carried down, or else I can write balance carried down. So how much did I carry from here to show them equal? 1660, correct? So this is the balance which I have in my cash book. Now when I start my cash book in the next month or in the next date, I will start my cash book with this balance of 1660 as balance brought down 1660. And then again, I'll make my cash book for the next month. Suppose let's say this entire thing I'm closing on Jan 31st. So on Feb 1st, when I start my cash book, I start with 1660. Okay. So please make a note of this. This is the end of cash book. We will move further. Come on, make a note. Once done, tell me.
Yes, sir.
Yeah. So now what we are doing is, now what we did is like just we wrote the amounts. We can make we can see an analysis of cash book. See, we received money, correct? The cash receipts are from whom? Either we can have a vertical kind of cash book. This is vertical kind of cash book, whereby we showed all the names vertically, amounts vertically. We showed all the receipts and amounts vertically. We can have a horizontal cash book as well, which is many times seen in the case of petty cash book. So what is this horizontal way of making a cash book? See, receipts. So you can see now, like what are the major receipts you have. Maybe you have done some cash sales. Maybe there can be some receivables which you have in your business who have made you payments or you received from them, and then others. That is a normal general category. So we see that we started with $900 and then we made cash sales of 80. Okay, here we mentioned, but we have one more, we have a separate column for cash sales, and there also we mention it separately. This is horizontal way of making a cash book. Then we received money from our receivables, hey, 380, and we have a separate column. So we show the amounts in total column as well as in their respective separate columns. So 380 here, then from bean we received, we showed here, then from seed we got, we showed here, then from lendinger we got, we showed in others. Why? Because that's the other category. Cash sales we did, we showed money here, and then sale of non-current asset also goes in others. Then we have showed here, and then the total happens to be this, and this total what we are showing should be equal to all the totals of this respective individual columns. So if we add all of them, we ultimately get 4,370. Okay. Same is the case with the payments. So here again, we have three things: accounts payable, petty cash, wages, others. We do the same thing, the accounts payable. That means we made the payments to them. Here we showed this, and then telephone bill we paid, we showed this, gas bill we showed, petty cash we showed here, machinery purchase we showed here, and again when we totaled it is this. The single totals are this 430 and 100 and this 2,810, and when we add all of them, what we have, so 2,180. So we have we will just total this all, okay, because we have this 120 plus 310 plus 400 plus 280 plus 100 plus 1500. So what we say is till here we have 2710 and we know that this total is less than the receipts total. So we write the receipts amount here and the balance here. Okay, balance is nothing but 4370 minus 2710, so 1660. Because we have to show this figure, we have this balance, this payment side has a shortage of 1660. That means the payment side cannot match with the receipt side because there's a difference of 1660, okay, between them. That difference we are showing here. Okay, see, very simple. If you see in layman terms, you got how much money? 4,370. Did you get this much money or not? Please tell me. Hello.
Yes, sir.
What is your receipts in total? 4,370, right? Am I right? Hello.
Yes, sir.
What is our receipt total? Yeah. How much payments we made to our customers, to everyone? From this receipts, if we make this much payments, how much is left over with us? This amount can be used in the next month as balance brought down and we can start our cash book again. Now tell me finally, yes or no?
Yes, sir.
Yes,
Hello.
sir.
That's what. From this receipts, whatever you got, you made all these payments. So this is your leftover cash. And this is the base for the next month's cash book. That means this amount will be taken as the next month's like cash which is available with you, and again you see what receipts payments you have, again you see next month what is left over with you, and again you can proceed further. Correct. See why you have a like positive balance here, because receipts are 4,370, which is more than the payments what we made. So we are left over with this. Now let's say for example, if your receipts are 300 and your payments are 500, that means 300 what you got you have utilized for payments and 200 excess you have put from your pocket. So you get negative cash balance. Am I right or wrong? That can be a loan. You have taken loan and made the payments. Please tell me yes or no.
Yes, sir.
That's what it is. Okay. So common sense. This is all common sense. Nothing more than that. So 4,000. So here we made 430, 100, and here 1,500 plus 280 plus 400. So 2,180. And what we are seeing here is plus 100 plus 430. So when you add all these amounts, it happens to be 2,710, and that shows a difference of 1660. Why? Because out of these receipts, what you have made this payment, and this payment, and your leftover, when you made all these payments of 430, 100, and 2,180, that is total of 2,710. You are left over with 1660 that you are showing here. Okay, that's what. So have a look at this. We'll move forward. So this is practically very easy to understand. We have this much receipts, we have made this much payments, we are left over with this. And if we have this much receipts, we make this much payment, that means we borrowed this much. That's it. Because paid more. From where we'll pay? It's a business, we'll borrow. Negative balance, negative cash balance. Once done,
Yes,
please confirm me.
Done, sir.
Yeah. Who please confirm me if you're done with? I'm waiting. No, you can take your time.
Yes, sir. I'm done, sir.
Yeah. Done?
Yes, sir.
Okay. So now last and final topic of subsidiary books, books of prime entry is petty cash book. See, petty cash is nothing but it's a it's a book maintained to record very small or very petty payments. Okay, we'll see that. So you have this a petty cash book example, similar. It's like a horizontal way of making a cash book. So you have started with some balance of $250. Okay, how you started with a balance of 250? See, you got some money from the management. See, what happens is for all this petty expenses, some budget is made or some amount is released. Okay, so let's say you have $250 to make all these payments. Okay, so you started with $250, that is what you have, and then all these payments what you have made. So what is the payment? First payment, milk bill. So you showed under the milk column, postage and stamp. See, all these are very petty payments, $9, $10, $25. So postage, taxi fare, you showed in travel expenses, flowers for staff, birthday and all, you have showed this here, and it goes into others, 15. So what you have seen is out of $250 what you received, you have made payment of 25, 9, 10, 15. How much is left over with you? Count it. Just calculate this. You are left over with $191. Correct? That is the amount you are left over with. Again, next month you can start. You can use this $191 for all your other petty payments. Okay, and you can make a record of all those payments, and again you can see how much you are left over with. Fine. Shall we move forward? Yes.
Yes, sir.
Now the same thing here, impressed system. See, under what is called the impressed system, this is another way to see the petty cash book. The amount of money in the petty cash is kept at an agreed sum or float, say 250. So we have 250. This is called impressed amount. Expense items are recorded on the vouchers as they occur, so that at any time, let's say cash still held in the petty cash tin plus vouchers for payments is equal to impressed amount. So what is your impressed amount here? 250, correct? Yes.
Yes,
Hello.
sir.
This is your impressed amount. What are the vouchers for payments? See, whenever you make a payment, you have to carry that bill with you or that voucher with you, so that can be a proof of the payments, whatever you have made. So the vouchers show you have made a payment of 15, 10, 9 and $25. So all in all, that happens to be how much? Count it, 40, 50, 49, correct? So 49. This is your payment. I'll keep it like this. So now, okay, I'll make this 49 here. So now you tell me, what is the cash still held in the petty cash tin? Correct? Yes.
Yes, sir.
Come on. Yeah, that's it. Do an activity on impressed system. See, I have explained you, it is not a big deal, very simple. Anyone can do this impressed system. Okay, anyone can do this. So you can do that. Books of prime entry activity is a homework for you. Journal book is already we have done all those things. Activity homework. See, I'm purposefully giving you homework so that you can make that, you can do that at home. Then there comes the receivable ledger. So memorandum ledgers. Memorandum ledgers are used to record how much is owed by a particular customer or to a particular supplier at a point in time. That means we are speaking about receivable ledger related to credit sales and then payable ledger related to credit purchases. I don't know why they have not shown that. So there are two ledgers here. In memorandum ledger, the motive here is memorandum ledgers are used to record how much is owed by a particular customer. That means how much we are supposed to receive from our customer and how much we are supposed to make the payments to our supplier. So from customers, what we are supposed to receive, and and to suppliers, what we are supposed to make the payments. For them, from customers, if we are supposed to receive money, we maintain like receivable ledger. And to suppliers, whatever payments we are supposed to make, for that record, we maintain payable ledger. So what we do under this, so this is sales ledger of Mr. Jones. So they have showed some invoices. Okay. There are two types of things here. One is the cash sales. One is the cash which you will receive, and the sales what you make to your customer on credit basis. Okay. So sales ledger of Mr. Jones, what does it show? Sales ledger. So we will read in detail. We have seen that the sales day book records sales and cash book receipts records money from our customers. So we already have seen that when we have made a sales day book, we used to record all the credit sales. And in cash book, what we saw, whenever we were receiving money from our receivables, we used to record in the receipt side of cash book. Correct? Fine. But this does not show us how much is owed by a particular customer. These books were showing only the receiving aspect. That means what you are receiving from your customer. So sales day book was showing like about the credit sales. Okay, this was about the credit sales, and cash book was showing about the cash sales. But if we maintain a ledger of a particular customer, we come to know like that entire transaction history, what we have with our customer, with which we will know how much business we did with them. Correct? Please tell me yes or no.
Yes, sir.
Yeah, as simple as that. So there is an invoice number 1032, which shows sales made to our customer Mr. Jones, and it's a credit sale. So he is supposed to make the payment to us of $200. That is balance owing. Then we received cash from Mr. Jones. For what we will receive cash? This amount which he was supposed to give to us, he made the payment. Please tell me yes or no. That is on 5th. On 3rd, we sold goods to him of $200 worth. And on 3rd, the status is nothing but Mr. Jones is supposed to make us the payment of $200, which he hasn't made. But on 5th, he has made the payment of $200, correct? So we received the money. Now, how much he is supposed to make the payment to us? 0. Why? Because on 3rd, the status was we had a receivable from Mr. Jones. That means we were supposed to receive $200 from Mr. Jones. Now on 5th, he has made the payment. Now 0 payments he is supposed to make, or we are not supposed to receive anything from Mr. Jones. Now again on 8th, Mr. Jones has bought or purchased goods from us, or we have sold goods to him. We have sold goods to him. How much? Of 400 worth. Now how much is Mr. Jones supposed to make the payment to us? $400. That means Mr. Jones account is showing how much money he is supposed to make the payment, how much money he is supposed to pay to us?
$400.
So our receivables is how much from Mr. Jones? Finished, correct?
Yes, sir.
In the same way, we can make the payable ledger, and we can see how much we are supposed to make the payment to our suppliers. Receivable ledger or sales ledger, whatever we made, is showing how much money we are supposed to receive. Payable ledger would show how much we are supposed to pay. Same thing. That's it. Okay. So still the chapter is not done. Why it is not done in the sense we will see what is still left over somewhat. We have to just discuss something. Okay. So what happens? What kind of types of business documentation? That means, see, whenever you start a business, the first and foremost thing is you have to maintain the records of each and every transaction which is happening in your business. If you maintain all those records, it would always be better to better for you, because if you don't maintain records, if you want to cross verify or cross check some amount which is kept, which is like which you have in your account, and you want to know from whom I got that amount, so you may not be able to check the status, or you have made some extra payments, some customer, if he may not make the payments to you, and you may also not have grounds to ask. So there are a number of reasons. If you want to do a business in an organized manner, you have to maintain all the records. So what happens here? See, first quotation is requested for goods services. See, if you have a shop and you want to buy goods or inventory or stock for your shop, first and foremost thing is what you'll do. You will just ask to get quotations from various suppliers. You'll ask your purchase staff to get quotations from various suppliers. Am I right or wrong? Yes.
Yes, sir.
So there are suppliers A, B, C. So we'll ask them to give their codes. See, we want to place an order to all these people. So we want to place order for 10 items. So we ask them quotations for 10 items, and best one we will pick from all of them. Then once the quotation we get from them, so ABC has sent the quotation. A's quotation happens to be the best one, because there he is charging very reasonable to us. So we'll place an order, and the order placed is sales order. Okay, correct? That means we want to buy, na? So we make the so here things are not clearly given. So what I understand is, being the buyer, we will place a purchase order with them, correct? And our customers will give what to us? Sales order. Please tell yes or no.
Yes, sir.
See, customers will give us what order, what they want to buy. It is nothing but, for us it is sales order, and what we buy from our suppliers is purchase order for us. So these kind of orders are placed. We place an order to supplier for buying goods. We get the orders from customers for selling goods. Okay. Now, then when we give order to our supplier, what will supplier do? He will dispatch the goods to us. And when we get the order from our customers, we will dispatch the goods to them, correct? Yes. So goods are dispatched and signed for on receipt. So when I suppose Hamsika is buying some goods from me, so what will I do? I will dispatch the goods to Hamsika. When Hamsika will get the goods, she will sign the receipt. That means she'll sign a form that she has received the goods. That will give the intimation to me that, or confirmation to me that you have received the goods, correct? Yes or no?
Yes, sir.
Yeah. So that particular confirmation form or copy is nothing but goods dispatched note. So goods are dispatched and signed for on receipt. Goods dispatch note, confirmation that goods sent out to customer. Okay, that means we have dispatched, or our go down in charge has dispatched the goods. Okay, so good dispatch note is a confirmation that the goods have been sent to customer. But here, see, this is only about goods dispatch. Goods dispatching is an activity. Okay, the goods have been dispatched, but it has to reach the customer also. So when it reaches the customer, goods received note is signed by the customer. Okay, so that again is a proof with you that the customer has received the goods which have been dispatched by us. So what happens here from our go down, the goods would goods are dispatched. And then one of the go down in charge will like issue a note to the traveler or to the transporter or whatever you mean, and they'll sign it, and the go down in charge will keep that note, and he will give that to the management as a proof that he has dispatched the goods. And the goods will be received by the customer from the carrier, and they will sign the note, and that is called goods received note. Okay, confirmation that they have received the goods. And then payment requested. See, now everything has been done. Goods has been dispatched, delivered. Now the payments has to be done. Or if you are doing a counter sale, you'll ask your customers to make the payments. So payment is requested. So sales invoice. So when you sell the goods, you give the invoice to customer, okay, and they have to make the payment. Purchase invoice, that means this is from your side. You are purchasing from supplier, okay. So that guy will give you the invoice. You have to make the payments. Goods may be returned. See, this credit note and debit note has been discussed yesterday, and the payment at the end, if everything is done, the payment should be made, okay. So these are the things which we have discussed, and that is the end. So remittance advice is nothing but a document sent to a supplier with a payment, okay. So suppose this is A and this is B, and B is the supplier to A. So I'll write here supplier. So A will send remittance advice to B, a document sent to a supplier with payment. That means A will make the payment and send the remittance advice to B, detailing which invoices are being paid and which credit notes offset. That means these A and B are having a long history of transactions. So many times A has also returned goods to B, and for that B has given credit note to A and A has issued debit note to B, and all the overpayments and the returns have all been settled, and everything has been like shown as a history in remittance advice. So remittance advice has all the details of whatever the payments A has made to B, and whatever the goods he has returned to B, and whatever the money he has got back from B, and all those adjusted and everything, and finally what he has to give. So that is what is remittance advice. And after making the payments, what is that we get at final thing? Receipt, correct? See, if you made the payment to me for the fees for your classes, what will I give you? Receipt. That is a confirmation that you have made the payment and I have received the payment, and you have a record, correct? So this is what is all about this entire chapter. Invoices are nothing but the bills, what the seller gives to the customer, and it's kind of a formal request to the customer to make the payments. That's it. So you know what does an invoice show? Invoice shows the name and address of the seller and purchaser, date of sale, when the sale has happened, description of what is being sold, the items, how much quantity, what is the unit price, and if I have given some discount, or if supplier has given discount to me. See, trade discount. Trade discount is something which is deducted when you buy the goods from supplier. Okay, there's no cash entry for, no journal entry for trade discount. It is directly deducted. Cash discount has journal entries. I'll explain you that one afterwards. Total amount of invoice, including details of any of sales tax, if applicable, if tax has been deducted and all. And like sometimes date by which payment is due and other terms of sale are also mentioned. And details of any cash or settlement discount or anything will be mentioned in the invoices. Okay. So done this chapter almost. There's nothing to explain now. Fine. So I have finished this chapter. Tomorrow or the next class, I will start this chapter. And now coming to the test, let me tell you, you have a test on this first 5 chapters on Monday. No, on Sunday. So on Sunday, I will give you the paper for first 5 chapters. Will you be ready for the test?
Yes, sir.
Yeah, so I will give you all the 5 chapters test. Please prepare yourself very thoroughly. Everything has been explained in a crystal clear manner. And on Monday, we are going to next class tomorrow. That is we are going to start from trial balance to financial statements. Okay. Thank you so much.
Thank you, sir.
Thank you.